are just days away from 2012. Can you believe it? I personally cannot. But that means it's time to start thinking about preparing your taxes. We are joined today by certified public accountant Rosemarie Steve. Hi, Rosemarie. How are you?
Good morning, Allie. Good morning.
And tax tips. I know I need some. And the first thing you say to do is prepare a tax projection. And I don't even know what a tax projection is.
Yep. Actually, these are things that we do in the last few days as accountants in the last few days of the year. And a tax projection means that you look back over the year and you look at income and deductions and you figure out, am I getting a refund or do I owe money? If you're getting a refund, we've talked on the show before about that budget, and if you've bought all those Christmas gifts and you've got them on your credit cards and you set aside some of that refund and earmark it to pay off that credit card debt so you keep on budget in the new year.
Very smart.
If, however, you find out that you owe, our next tip is the fact that you pay some deductible expenses before year end in these last few days. And those kinds of deductible expenses would be like if you own your own home and you have a mortgage on it, you want to make an extra mortgage payment because the interest is deductible. If you're charitably inclined and you have a favorite charity and they have maybe a website, you can go online and do the online donation so it gets in right before year end and before the ball drops. Other deductible expenses might be if you have medical expenses. You want to go to the drugstore and you have any prescriptions that you might want to fill before year end. That would be things that you do as well. You can also put things on a credit card because you don't necessarily, if you don't have the cash flow right now, but you actually can charge it on the credit card before year end, and it counts towards being a deduction in 2011. So
very good things to think for the next few days. And you have another tip for us, and that's to go over any gains, any losses that you may have had in the last year.
So, yep, some of your viewers might have an investment portfolio, and given the fact that economic conditions and the stock market has been improving just a little bit over these last couple of days and couple of weeks, what you might look at is say, oh, maybe I realized some losses in the beginning of the year, and so I can realize some gains now in those investments and offset the two and have minimal tax consequences. Similarly, you know, the other way around as well. If you've got some gains and you realize some losses to offset the two.
Even it out a little bit. And your last tip I love. I think it's a great one. Remember to pay yourself.
Pay yourself first. Absolutely. You want to make sure that if you have a retirement account that's offered through your employer, make a contribution to that through like a 401k or something like that. If you don't, you have an individual retirement account, or if you're self-employed, you would want to make sure to set aside retirement funds. A self-employed person, the account actually has to be established before year end. So you want to go to the bank and actually just open it. You don't have to put the money in it, but it has to be open before year end. For an IRA, however, if you're employed, you can actually open the account at any time, all the way up to April 15th of next year, and it
so
counts
you have a little
towards this
time.
year.
That's good. So a lot of things you need to get done right now. A couple things you can think about for the next few months. Rosemarie, thank you so much for joining us this morning.
Thank you very much. I wish good health to the new year for you and your family.
And the last few tax prep days.
That's right.
So
That's
scary.
right.